New figures out today show the UK retail sector outperforming predictions. Retail sales leapt 1.9% in October, much more than a Reuters poll of economists. They thought it would be a lot less, but they usually get things wrong these days. And it suggests consumer confidence remains robust and hasn't so far been dented by June's Brexit vote. Notice I didn't say despite Brexit there, I just said it hasn't been dented by the Brexit vote. To talk us through what's behind today's numbers, let's speak to our economics correspondent, Andrew Walker. Andrew Walker, these figures just seem to be quite startlingly good.
They are very good, yeah. I mean, if you look at the figure over the last 12 months, we've got the volume of sales up by 7.4%. As you mentioned, the month-on-month figure was an increase in total of just shy of 2%. And one that really stood out for me was an increase of 27% in internet sales, which are now accounting for a total of 15% of all sales, excluding vehicle fuels. So, yeah, as you said, Andrew, there's absolutely no sign in these figures of any dent to consumer confidence coming from the referendum result. One point, I think, suggests that they're not likely to remain quite as strong as these figures suggest as we go forward, and that is that a lot of people are interpreting the figures as showing a strong surge in sales of winter clothing in October. So what seems to have happened is that a slightly milder September means that some of the sales that would have taken place in September have been shifted into October. So that has flattered the overall figure. But having said that, there is no question it's a pretty robust set of numbers.
One of the things that interested me about these figures when you drill down is that these are figures for October. So you would have expected the substantial fall in the value of the pound after the 23rd for some price rises to be working their way through. But absent petrol, which has gone up, prices actually fell by 0.7% in the shops. And that would suggest that its competition on the high street is stopping the falling value of the pound from leaking through into price rises.
There's certainly an element of truth in that, I think, Andrew, but I would say that 0.7% was a decline in prices over the year, and the Office for National Statistics say that that's actually been the smallest equivalent figure now for more than 2 years. So maybe there's a suggestion there of price rises due to sterling falling coming into the shops very gradually. And do bear in mind that it does inevitably take time for these kind of things to move through the supply chain. Retailers and people further back in the supply chain do have stocks of goods that they've bought before sterling fell. It'll take time for those to work their way through and actually appear in the shops. And it is worth just keeping in mind that the figures we've had for for producer prices, that's the prices charged by manufacturers and the prices they are themselves having to pay for their imported raw materials, those have really gone up pretty sharply.
Indeed.
And so it means either that's going to be reflected in due course in the shops, or someone in the supply chain, some businesses in the supply chain, are going to take a hit to their profits.
To their margins. Andrew, thank you for that.